Hey, we've got the inflation data in today from the Australian Bureau of Statistics. Unfortunately, the numbers that we've got are not great. Hi everybody, it's Billy Amaritis here from 360 Financial Strategists. We've had some news come out today from the Australian Bureau of Statistics with the latest inflation data, and it's fair to say that it was a lot worse than what we had all expected. The data came out earlier today. Annual inflation, so this is to the end, the 12 months to the end of March, inflation is running at 4.6%. Just a reminder, the Reserve Bank, their target inflation rate is between 2 and 3%. So we're well and truly outside of that range now. What does that then lead into? Next week, on Monday and Tuesday, the Reserve Bank are meeting. They'll hand down the decision on what they're doing with interest rates on Tuesday. I'd say it's a foregone conclusion that we're going to see at least a 25 basis point jump. If you consider what we're seeing overseas and the things that have caused the jump in inflation, we're obviously experiencing a lot of pressure from petrol, fuel, and the like from the conflict that's going on in the Middle East. What does that mean for different people in different positions? Look, if you're a homeowner with a mortgage, it means that you're going to be paying more for your mortgage. Unfortunately, you're paying more. You're not going to get anything additional for it. Unfortunately, it's just another expense. If you're a buyer trying to enter into the market, generally what happens is when interest rates do increase, it decreases somebody's borrowing capacity. So just keep in mind that if you're yet to go and purchase, or you're thinking about going to an auction, and we do see the interest rates go up next week, you're going to see a difference between how much you can borrow versus how much you can borrow now once that does go through. From a property investor's point of view, I mean, interest rates are going up. Hopefully it means that rental yields and yield returns are steady and stronger. So from that perspective, that's probably the only area of the market that we're kind of feeling okay about. If you're a business owner, quite challenging times because all of your inputs are increasing in terms of the cost of everything. The cost of borrowing money is also more expensive when interest rates go up, and what it does to consumer sentiment and the customers that are actually buying your products and services means that people have less money to spend on what it is that your business is selling. And unfortunately for homeowners, where you've got a mortgage, you've got pressure coming in from every side. Cost of living is increasing, mortgage rates are going to go up next week. It really feels like that's the segment of the market that's going to be impacted the most. If you have any questions, or you wanted to know more, or you want to talk about your circumstances, feel free to reach out to the team at 360. Share, and look forward to chatting to you soon.